contractors, Kristin Bailey here, CPA and Certified Construction Industry Financial Professional at Katz Abash, a CPA and consulting firm that specializes in construction contractors. It's almost the end of the year, and that means it's time to start thinking about taxes, or maybe you've been thinking about them all year, like me. Either way, I've got a few reminders for us during this tax planning season. First, if you got a second round PPP loan in 2021 and it's been forgiven, that income will flow through to you as non-taxable income. And if you are an S corporation, you will get taxable basis for that non-taxable income. The deductions are fully deductible. Now, most states conform to this and follow federal in our local area. Virginia is the exception. While the income is not taxable, only $100,000 of your PPP deductions are deductible. So if your loan is over $100,000 and you do a lot of work in Virginia, you can expect to have a higher than normal tax liability in Virginia. If you were able to qualify and claim the employee retention tax credit, this is taxable income. You cannot both deduct an expense that you claimed a credit for. So your wages will be reduced by the amount of the credit, causing your taxable income to increase. Now, there is some uncertainty with future tax rates. While we don't know what the future brings, we do know that we're at a pretty low tax rate right now. So now might be a good time to review your deferral strategy. And if you do have a tax deferral, assess if you want to continue to grow it this year, keep it consistent, or maybe reduce it and pay some income tax at a low tax rate. If you're an equipment intensive contractor, you have a little bit of a flexibility with the timing of your depreciation. Normally, we recommend taking bonus depreciation and writing off the full cost of your equipment in the year it was placed in service. But the alternative to that is to depreciate it over 5 or 7 years. This decision does not need to be made until right before you file your tax return. So as long as the asset was placed in service by December 31st, 2021, you can either take bonus depreciation or push those deductions out to future years when tax rates might be higher. Again, this decision doesn't need to be made until you're about to file your tax return. So if we know more about future tax rates in March and April, you can make that decision at that time. So I hope everybody has a great holiday season, and we'll see you next year. And if you have any questions or want to talk about anything related to tax planning or construction tax or accounting in general, please give us a call or send us an email. See you next year, contractors.